It was a pretty sleepy week for real estate in the greater Portland metro area, but that is to be expected over the week of the 4th. However, we did see another surprising spike in sale prices. Was this the result of lower interest rates about a month ago or just an anomaly? Let's go through the latest stats and trends and try to make some sense of our market. Welcome to Real Estate with Ron. I'm Ron Milligan with RE/MAX Select here in Portland. I'm so glad that you joined me today. If you are new to the channel, I'd love it if you would like this video or maybe share it with someone who needs the data, or maybe even subscribe to this channel so that you see more videos like this in your feed. Now on with the report. The average sale price rose about 3.1% over the previous week's pretty decent number. But where we did see a big jump was compared to last year at this time. Sale prices were up an average of almost 7%. That's way out of line with the year-over-year numbers that we've been seeing in our sample of the metro-wide sales, which includes Portland Metro and Southwest Washington. The year-over-year average has really only been up about 4% and 2.7% over the last couple of months. So what's going on here? Mortgage rates were at a low point about a month ago when a lot of these deals went under contract. That might help explain the higher numbers, but it still feels a bit anomalous with me and kind of out of line with our broader trends. So I'd like to see a couple more weeks of numbers in this range before I get too excited. Both the supply and the demand numbers were pretty low over the holiday week. The number of new purchase contracts agreed to by buyers and sellers was down, which was expected, but it still landed a hair higher than the buyer activity we saw last year at this time. On the supply side of the equation, the number of homes that were new to the for sale market this last week was really small. Again, that's to be expected given the holiday. But when I looked at last year's numbers, I was surprised to see that the number of homes new to the market was down by almost 35% compared to last year. And that brought about a small decrease in the overall number of homes that buyers have to choose from. And to see a decrease this time of year is a little bit unusual. So that's something that I'll keep an eye on. On to mortgage rates, one of the biggest hurdles when it comes to affordability in today's market. We did get a surprisingly good inflation report on Thursday. It came in lower than expected, and that was along with some higher jobless claims. Doesn't sound great, but both of those reports influence rates down. On Thursday morning, I found the 30-year fixed advertised at 6.375%, best case scenario, and that was the best rate I could find out there. Most lenders are probably somewhere above 6.75%. Looking forward, we should see a lot more activity as we come off of that holiday week. And of course, the drop in interest rates might bring a little more buyer activity to our market. Right now, the Freddie Mac average for the 30-year fixed mortgage is only a hair below what we were seeing last year at this time. And of course, up until this point, interest rates this year have been higher than they were last year. Despite that, buyer activity has either been keeping pace with last year's activity or outpacing it. So I'm really curious to see what will happen as maybe those two numbers start to invert and we have lower interest rates this year than we were having last year at this time. And of course, I will bring you that information as soon as I have it, and I look forward to seeing you right here next Friday.